Hey guys, how's it going? I hope you're all doing absolutely amazing and are trading safely in the markets. It's your boy VGOK and I'm actually finally back with another video for you guys today. Now I do understand it's been an absolute age since I last posted a video and I do really apologize for that. I'm going to be trying to get as much more content out as possible for you guys so I can provide as much value as I possibly can. Now in today's video, just gonna sort of bring it back to a case study video. So this is actually from CPI. It was about a week ago, this CPI news for the US dollar, and the actual trade I placed was on GBP/USD. It was a buy scenario, and in the end it achieved a maximum of a 1:19 risk to reward ratio. However, I did close off most of the position at around a 1:9 risk to reward. Also, this trade was actually taken live and shared on stream with my mentorship group, where they were not only able to capitalize on this successful trade, but also gain a close insight into my trading psychology too. Now, if that's something that you'd actually be interested in joining, then please do drop me a message on Instagram and we can discuss things further. But without any further delay, let's get straight into the case study video. Now, as always, first off, I'm going to go and look into the before, during and after screenshots of the actual trade that I placed, so you guys can see exactly where I was looking to get in, why I went to get in, and then we'll jump into trading view to jump into the analysis as always. So right here, what we can see on your screen now is the before screenshot. Obviously you can see there are two positions on the screen right there. However, it was the buy that I placed first, and the sell was more of a monitoring zone just to see if price would slow down and distribute in that area. So it does say, obviously you can see there is a sell position put on there, however it was more of a monitoring zone for myself. But as you can see, coming into around 12 o'clock time now, we do know that the CPI news was actually coming out at 1:30 PM, as it always does. Obviously this is in UK time, and we can see what's exactly happened in here. On the 1 minute time frame, we can see that price has taken out a set of equal lows, reacted into a previous demand zone, and we've seen a manipulation, which is what I entered off of. So that was the before screenshot. The during screenshot, so after some time had passed, and after sort of holding the trade for a bit more time, we can see that it had gone into profit. And then as you can see, the after screenshot, you can see how it consolidated before the news for a decent amount of time, probably about an hour, maybe over an hour. And then on the news, you can see we had a spike to the downside, clearing more liquidity out over here, and then the reaction from the news, which sent it up a long way into profit. So the main TP was taken at a structural high, which I'll show you on TradingView, which was at around 1:19 risk to reward. However, a majority of my position that I took out was at this point here, which was a 1:9 risk to reward to secure a large chunk of the partials at that point. So jumping straight into the trading view analysis of this part of the video. Now the main demand zone which I based this price action off of, the main demand zone which I based this buy position off of, was based off the 4-hour time frame. So you can see in here, looking at previous price action, we've actually got this rally formation which starts to challenge these highs over here. Now my thinking was that if this was going to continue bearish to the downside, we wouldn't quite have seen a nice accumulation like this beforehand, and we would have seen a nice bearish reaction happening within this imbalance. So you can see there's a nice base drop within there, which takes out structure point there to hopefully continue. So lower high, lower low, anticipating another lower high here for another lower low. And in actual fact, what we got on the 4-hour time frame, as you can see, was a nice rally and then some consolidation. So the rally base and then the rally formation right in there. So that was the starting of my demand zone. And as we go down lower into the lower time frames to see how we based this position, we can start to see, especially on the 30-minute and lower, so just looking at the 15-minute here, we did get a really good spike into the zone over here earlier in just after London session open, and we saw a good movement to the upside, showing us that this was really looking to go bullish. So at first glance, my first area to look into was this area here for a potential buy, but after monitoring in that zone, didn't quite like the price action on lower time frames. And I'll show you exactly what I'm talking about. So right in here, this was that rough area where I was hoping, obviously this is the first spike into the zone, we saw a really good movement to the upside, making a new higher high, continuing this uptrend. However, when we look a bit closer on these lower time frames, we can see that there's some equal lows existing in here. So after seeing those equal lows existing there, I was anticipating for price to come back down into and manipulate this area, and as you can see, that's exactly what it's done. It manipulated this area, and on the 1 minute time frame we can see exactly why and where I entered this position. So right in here you can see that's where I gained the position and put in the stop loss just below the base of this area here. So you can see in here there was a bit of a rally, re-accumulation, and then the rally to take structure out above this. So just below the base, which is about here at the 22720 level. So around this point here was the stop loss. So it was about an 8 pip stop loss. Saw a really good reaction in here, sell to buy movement, and caught the entry nicely in there to see a movement to the upside. Now I know you guys can probably see this already, but there's a big drop on here that happened at 1:30 for the news. Now this was a big discrepancy across a lot of data feeds. So as you can see, at the time of when I actually took the screenshot and when I was actually physically trading this, I'll go back to the after screenshot. You can see that that drop down doesn't actually exist in there. You can see the drop down doesn't actually exist, as it does on TradingView right in here. And the same on the MetaTrader, where I was physically placing the trades. It looked a lot like this. So I didn't actually see this big wick to the downside. However, comparing it to other data feeds, so I think when you look at the Oanda data feed, you actually see this movement. FXCM, you see this as well. So I think after the fact that this trade had made the movements, the chart sort of shifted slightly, and because of the difference in the data feed, this has come out looking like this now, as opposed to at the time when we were trading it, it looked like this, and it was looking to hit TP quite nicely. So as you can see, this didn't really exist at the time. However, you can see right now that this did make this movement. But as you can see, it wouldn't have taken us out of our safe stop loss area right here anyway. So it would have been good spread depending, but we managed to make this trade work for us quite nicely. Now in terms of the 1 to 9 risk to reward, where I took most of the partials, as I mentioned earlier, so the main 1 to 19 was the final one, taking profit at this structural high here. So it's just looking to take profit as this, looking at this as a reaccumulation of price to continue higher. Obviously it does go on further, so I missed out on a bit more profit if I let it run to completion over the next day. However, I was pretty happy at 1 to 19 risk to reward to take profits at that point right there. And the reason I took partials at 1 to 9 risk to reward was it was coming into this area right here. Now if I go into the 30-minute time frame, you probably see this a bit easier. Right, the 1 to 9 risk to reward was around about this point here, and we can see there was a good area of liquidity. Over here you can see some equal highs with this drop sort of supply zone forming in here. So you can see the drop, the base, and then the drop, which takes out the structure point below this point here. So around this point I was anticipating there to be some sort of a supply zone existing in this area right here, which was the main reason for me to take a lot of partials as it was coming here. So I had a hard stop loss here for half the position, and the rest of it was left to run up until here, and that was how we looked to achieve that sort of a risk to reward on this position. Now I know that was a shorter video than what you're probably used to seeing on my channel. Obviously I'm trying to get much more content out for you guys so I can provide as much value as possible. But with that being said, if you enjoyed that full trade breakdown of that GBP/USD buy scenario, which was over the US dollar CPI news, then please do give it a like and hit that subscribe button if you're new around here. But with that being said, I'll catch you guys in the next video for more of that trading sauce.